All right, it's rally mode, rally mode, rally mode. What caused this rally today? CPI came in a little lower than lighter than expected. One of the things that we noted here and I'm going to go through a couple positions and also ways that we use options to not only take directional trades, but also to protect stock positions. And I think that's going to be important. We'll go over one of the earnings that are coming out on Target and how I took a trade in Target even today, added to the position. And just in case I'm a little nervous about Target, I'll show you what we did so that we can profit from the market to the upside, still stay in the position. First, let me just share with you what a couple things from last week we engaged in. First off, we did an Amazon along November 17th that's expiring this Friday. It was a 4-wide spread on 4-wide, meaning we're long the 143, short the 147. So the strikes are 4-wide. We also did the same similar width of a bull call spread in Google Alphabet, that is, a 133, 137. Since that entry, we got and took advantage of today's rally and exited that position. We're in some CVS, Delta Airlines, and then yesterday, coming into the week, this is our weekly newsletter. We got filled right on the low tick there on Sherwin-Williams. Nothing else got filled per this newsletter. So we still have open position in Delta Airlines. We're still in CVS. That might be a bonehead. We're only long half a position on Palantir because we scaled into the trade and the second half did not get filled. So we have, and again, Target, here's a long entry on Target. So I want to address that. How are we taking protection or trading Target going into earnings? Before I get into that, I think you also may get some benefit out of the weekly newsletter that I put out. And I do this on the weekend so things are calm and cool and I'm looking at things. We had a weekly resistance, a monthly resistance in the SPY. This is my analysis that I use with Person's Pivots, PPS, breadth, volume, seasonal trends. I look at the top 4 stock indices, the spiders, the Qs, the Russell, and again, the diamonds, the Dow, that is. This week, I was talking about watching for a peak high in the SPY near monthly resistance. And so if I'm bullish and the weekly pivots were in a bullish mode, we were kind of taking advantage of that. And so this is what we've done. For some of the other positions that we had using options as a directional trade, today, looking at activity, we got filled, and these were options on the Russell. I bought these for like 75 cents, dumped them at a double. Google, this is that trade, the 33-37 4-wide spread. Took a profit on that. Etsy was an older position. I think I got lucky on this rally and was able to exit that trade at another profit. Amazon, here's that 4-wide spread right there. Exited that trade. So we had, and then Google, I had some extra long positions on just to be just net outright in the December 1st, the 135 strikes. So we took some profits on those. Spider had some bull spreads on, small position on that, 40, 48, 8-wide spread on that. And as if the market went up to where we were prognosticating, then, you know, the one thing, it could go up forever, but these are options. And if the market pulls back or theta takes over, you know, there's always something or decays the value due to time is what I was what I meant by that. It's nice to take a profit. That's all. This rally was designed to take a profit. So as you can see, we use options for directional trades using our outlook and our indicator tools, Person's Pivots, the PPS, and we have ideas of where the market can go based on the technical condition. For individual stocks such as Target, which has earnings out, I'm long the stock at lower levels overall. And if you take a look here, Target, long from 108.61, the average price. Now, what I've done is I've implemented what's called a collar strategy, where I sold upside calls. So let's say Target comes out, my initial instinct is right, the technical analysis is correct, and the market goes up tomorrow. Is it going to go up $20? Probably not. I mean, it's a retail store. They had some issues over the summer. They may report that they, came in line with expectations of earnings. The revenues may not come in, maybe a little bit light. Maybe they have extra inventory from over the summer, like those extra bathing suits that may not have sold, right? So a lot of things could come out with this. They could also give out some really positive guidance. So have top, bottom, and bottom line miss and give out great guidance for the holiday season. I'm not quite sure exactly how it's going to play out, to be honest with you. I do believe that we could see longer term, and that's what I like about Target. Longer term, I don't think we're headed for a recession. I think consumers, the market thinks we're headed for a recession. And more importantly, if the market feels that there is, maybe they prognosticated incorrectly there's a recession, and maybe if they underestimated the Fed's work is maybe closer to being done, and with today's CPI number, that could put a boost in the market. We're expecting about an $8 move out of Target. So there's already a $3 move. So 8 minus, so $5. So let's just say if they're expecting an $8 move prior to today's move. So 8 minus the $8 implied move, but then you got $3 already built into it today. So that would be an extra $5. So $5 from here is $115. So to capture, if the market goes up all of that extra $5, I want to capture that on my long position. So I sold the 117 calls a little bit further, a couple bucks out of the money than that implied move. I collected on that transaction $1.75. Now, with that $1.75, let's say I'm wrong and something bad happens to this market and the market goes down, say, the $8 minus plus the $3, right? So we get back to where we were yesterday. That's $11 move or a 10% decline. That puts us back to possibly, $99, 100. I'm not going to like that, to be honest with you. To be long from 108 and have the market go and put me out $9, 9% on my position, I'm not going to like that. To soften that blow, I use the market's money of upside calls to help finance downside puts. So in essence, if the market goes down, I'm somewhat protected using some of the market's money. Didn't cover the entire position, but I'm all right with that. I'll avoid a landmine. And we implemented, this is the time to implement a collar strategy, it's called. This is something you should know if you're trading stocks outright into earnings season more times than not. This is really going to be a helpful strategy. So as it is right now, we've got a lot of different strategies that we've implemented and long positions, AMD, a Boeing, which I kind of sense that Boeing's got a lot more upside. Maybe it's not going to be immediate, but it probably, we look at Boeing as into the 220 area. So I think that there's a little bit more upside out of Boeing. This particular week, Boeing never got down to my number, but I was trying to add. I'm already in it. Charlie Schwab is another one, broker dealer. I like Charlie Schwab. Yes, Sherwin-Williams is up big in the materials. And what people don't know about Sherwin-Williams is they have a government contract. They just don't sell paint for residential, but they also have government contracts. So I'm not quite sure it's the paint of choice to paint the White House white, but they do have government contracts. And I'm thinking military contracts for industrial grade paint. So if we perhaps need to increase our military budget, if we get that passed through the Congress, now this might be a far stretch in the imagination, but think of it this way. If you have to build more military armor, personal carriers, tanks, and you need to go to desert camo rather than maybe jungle camo, where we would send something to like maybe Ukraine. So for that purpose, you're going to repaint and have to camouflage certain equipment. And maybe, for example, the halls of Congress need to get repainted. So bottom line, that plus the housing with lower interest rates, the perception of interest rates come down, Sherwin-Williams should have some kind of a better bounce out of the market. So today, Sherwin-Williams, definitely SHW. This was a good call. You can clearly see on a one-year basis, it has a little bit more upside room. I wouldn't chase it right in here. For more trade ideas, you can obviously come to personsplanet.com. Go visit our website. Obviously, the YouTube, I haven't done one in a long time. And the reason I haven't done a lot of videos or social media presence is I'm busy trading, number one. I run a trading room, number two. I write a newsletter. So I'm more engaged in the markets and trading, and then I am doing a social media, I guess, campaign. But I did want to at least give you guys some ideas, because I know we've had a lot of people have been asking me, John, you got to put something on YouTube. And so what I thought, taking advantage of today, saying, listen, the market's given us good stuff. The analysis isn't entirely perfect. There are certain times of the year that things just have not worked. Let's just put it to you that way. We were calling for a downturn in this period. You could see the little orange arrow triangle that generated the little sell signal that we got, and then a little buy signal last week, and now we've got liftoff. Buying against support with improved technical conditions and seasonal. This was almost textbook why we were long. The question is, do you stay long when the market gives you this kind of money? And the answer is no. What you want to do is you want to take some money off the table. I do believe that we'll have an opportunity for a pullback. There's a lot of stuff out there in certain areas like technology, but there's also still a lot of sectors underwater that aren't even starting to move, such as airline stocks. They're not even close to where they were of their summer highs. And I'll give you an example, and you can take a look. Let's say, where's the best looking trade coming? This is Delta Airlines. This stock was trading at 49. It's at 35. I mean, it was at 49 in July. So when I tell you there's a lot of stuff that's still underwater, there's a lot of names underwater. If housing's going to be doing well, if the rich still have a lot of money, here's a company called Restoration Hardware, or RH. I think they changed their name. This stock's another one that no way is it anywhere near its summer high. So would I recommend that right this second? Right this second, I'm just saying we've taken some profits on a rally. I'm just also pointing out there's some really good values out there on some stocks that are still underwater relative to where they were over the summer. Finally, I know that AI is a big thing, and C3 AI is the stock symbol is AI for artificial intelligence, and it too is nowhere near its highs over the summer. If there's anything that I think might come in, and if it does, when I say come in, I'm talking like somewhere near like 112, maybe a little bit 115-ish. It's AMD, and as you can see, I'm long 600 shares of that at around 104.74. So again, I'm a big fan of AMD relative to NVIDIA at these levels because of the MI300 chip for artificial intelligence, and I think that'll still be a kind of a good value play as we move forward. So I hope you enjoyed the video. Obviously, you can stay at the Google YouTube channel here and look for other videos, or come to our website, sign up, and come visit our live trading room. I think you'll find a lot of impressive work that we do there, as well as crank out a lot of great trade recommendations. With that said, have a great Thanksgiving. If we don't, if our paths don't cross between now and then, and please be safe and God bless. Thanks for listening. I hope you found value out of our presentation. Thank you.